If you look at the official forecast that the IMF and the European Union has done about this year growth in Greece, it's going to be negative growth. We don't know yet how severe, but between the fall in exports, shipbuilding and exports of tourism, and between the weak domestic demand, it's obvious that Greece, like every other economy in the Eurozone, will have a recession. I think it's not pessimistic, it's just what the data are showing you.
I would like your opinion about employment and unemployment in the Eurozone, the prospects.
Because of the recession, there is a rise in the unemployment rate. That rise is not as sharp as in the United States because the labor markets are less flexible and policies that try to minimize the effect on employment of the severe recession, but you see a meaningful increase in that unemployment rate, and until there is going to be a meaningful recovery of growth, unfortunately, the unemployment rate is going to go up. The OECD expect that most of the advanced economies are going to have an unemployment rate above 10%, including the Eurozone, by next year.
Okay, and what about the analysts that insist about the breakdown of Eurozone?
I don't believe there is going to be a breakdown of the Eurozone. There is always an epsilon small probability of that happening in the next few years, but I think that the Europeans are going to be able to face the challenge of this crisis, to accelerate the structural reforms, to do the fiscal consolidation that's going to lead over time to a convergence of growth among the Eurozone countries. But I would say the success of the Eurozone is conditional on doing those fiscal and structural reforms.
Professor, is this a mid-crisis bubble that we're experiencing now?
Well, what we're observing right now is that in some asset markets there is the beginning of another bubble. In my view, the rise in oil prices, energy and commodities is not fully fundamentally driven. Part of it, of course, is driven by expectation of a recovery, but all this wall of liquidity is leading to investors buying commodities in ways that is not justified by fundamental. That's why, like last year, too soon and too rapid increase in oil prices might be leading to dangerous effects, for example. And even some of the rise in stock prices is driven by fundamental, this process for recovery, but all this slosh of liquidity is also going into equities in a way that may not be justified by the recovering of profits and earnings.